Hi everybody, it's Andy Phillips here, and welcome to another magic moment with Mark.
Yes, hello there, everyone.
Just made it up on the spot. How about that? But it is every time we do these things, it's incredibly interesting. You know, we've got maybe a few things to talk about the budget and stuff like that. But can you give us a little bit of an idea of what this
Well, this particular session, this one's obviously we're presenting this live for members of the PIN family, so I'm going to be talking about property, but it's relevant to a lot of businesses, and it's this distinction between capital and revenue expense. It's particularly relevant where we're refurbing properties or getting properties ready to be rented out, but it's relevant across all businesses. So hopefully you enjoy it. Yes, I've just been listening to Rishi before I come and speak to you. So that might feature in some of the conversation between Andy and I, but otherwise I'm focusing on capital or revenue.
Cool, excellent. So do you want to stick your presentation up and we'll...
Sure. Okay. And hopefully you've got it there.
There you go, brilliant. That's it, that's up.
Good, well hello everyone. So this is today's topic, capital or revenue. We're going to start with usually, who am I? Yes, firm accountants. Yes, we're strategists. Yes, we work very closely with our clients. You're going to have to listen to the wealth warning again. Always have the wealth warning. Anything I say is not professional advice. You must take advice from your professional based on your circumstances. Obviously, if you don't have an accountant who's up to the job, come and talk to us, and we'll be pleased to speak to you. You notice an email address at the bottom there that is PIN@, simply because it's by the kind offices of Simon Zucchi and the PIN family that allows me to make this presentation. So let me know that you came to me via this session. So let's crack on. As I always start with these things, I'm going to overview and then we get into some detail. So overview. Yes, if you can get this right, it will affect your tax liability. We can manage your taxes if we can get this distinction between a capital cost and a revenue cost. So we're going to talk about property. So is the refurb of your property capital, in which case it will sit on the balance sheet of your business and you'll only offset it when you sell the property? Or can we offset it against the revenue, therefore will decrease your income tax or corporation tax? Get it right, we're going to affect the taxes significantly. Get it wrong, the tax office will be looking for you. There's potential for interest and penalties. You'll see through this presentation, I'm going to use some blue italics. And here's your first one. And basically, these are words from the tax office. So where I've stolen their words, I'm telling you I've stolen them. And the purpose of this first one is to show you that it's grey. I know it's in blue text, but it's a grey topic. There is no single simple test that can be applied. Absolutely right. It's grey. What is it? Determined by reference to the relevant facts, your specific circumstances, that applied at the time the expenditure was incurred, and it's linked to the circumstances and exact nature of what you're doing. So what HMRC has immediately told you is it's a grey area. So I will be emphasising it many times, but you are not meant to be taking this presentation as being the professional advice. Come and take professional advice and talk to your accountant or talk to us. 3 comments, get us started. Be careful what you wish for. I'm actually dealing with one at the moment where a person has claimed a lot of their refurb costs as revenue items. Good. So that's decreased his profits. If it's decreased his profits, it's decreased his tax. We're very happy. Lender looks at it now and says, wow, you're not very good at this property, Lark, are you? You've been making losses in quite a huge fashion for a long time. So all of a sudden we're having this conversation about, well, should he have capitalized some? I know short-term tax management is what everyone asks me to do. Hey, you're an accountant, decrease my tax bill. Sometimes that isn't really what you want me to do. That good short-termism, is it a long-term good idea? Interesting. Be careful what you wish for. HMRC. I put the third one up as well. HMRC are not lawgivers. The law is given by Parliament. Parliament isn't that good at writing law. Over the passage of centuries, they're not good. That's why we have courts. Courts interpret the law, and there's the law. HMRC simply have to live to the same law that you and I live to. The problem is that they will tend to interpret things to suit themselves. So if I come back to the second topic, what's your appetite? So you can listen to what HMRC say and say, well, their interpretation of the law is different to what you interpret it to be, and you want to have your day in court. You want to fight them. Well, okay. Personally, we would encourage you to go and focus your effort and attention on making some money. So don't try and pick a fight. You don't have the resources that HMRC have to fight you. So we tend to look at HMRC guidance as being, let's apply their guidance. It's not always the safest thing to do. HMRC actually stood up in court and said that their guidance should be ignored in one circumstance because it suited them to get more tax out of this poor chap to ignore their own guidance. So they actually argued against their own guidance. But generally, my position is I suggest you trying to stay within the guidance, even if you think the legislation could be interpreted differently. So I'll be using blue italics to tell you where I'm using that language. So there's your overview. Do you really want to fight? Do you really want to have thundering losses, even though that means you don't pay tax? Think about what you're looking for. So crack on. Having done that overview of the environment that we live in, now let's look at the big distinction between a repair and enhancement. It's always difficult to think of what these words are. Are we talking about repairing? Are we talking about refurbing, renovation? What is the word we're using? So you see that I've used the phrase enhancement. It is the core. So when you repair an asset, so that means you're restoring it to what it was originally and normally looked like. So there was a wall, it's been scuffed, I've repainted it. Well, okay, it looks like a painted wall now, but that's okay. That's an allowable revenue expense. This is a repair, okay? And throughout all of this, we're always going to use the word but. But if an asset cannot be used as it currently exists because it's in such a poor condition, then the repair, even though it is only a repair, it's still capital in nature because you can't use the asset. So obviously, my painting wall example, no, I'm very happy that's a repair. But bought the house, the huge number of tiles off the roof, got a discount on the price because it was in such a bad state of repair, sent the chap in to repair the roof, put some tiles back. Is that repair of the roof allowable? No, because you bought it at a discount. You couldn't use the property with a hole in the roof. The repair is not to bring it back to an original standard. You bring it back to the standard greater than it was before. I'm going to be dealing with that one in a little more detail on the next slide. And alterations are normally capital. And this is particularly where you're improving or changing an asset. And it's that the last few words in that sentence. Are you producing an enduring benefit? So is this thing got some long-term value? You'll be surprised at some of the things we're going to be talking about towards the back end of this presentation. And as always, the word but comes in. If you're doing a repair using modern materials, it looks like an improvement. But if the new materials are broadly the same, and we use the double glazing example, because that's the example HMRC use. So you replaced a single glazed window, you replaced it with double glazed. Have you improved it? Yes, you have. Is it of an enduring benefit? Yes, it is. But all you've actually done is used modern materials for old materials. So it's allowable. It's still a repair. Okay, I said I was going to get onto this topic. Is the property usable without the repairs? What we do, we're property investors. We buy and we refurb straight away. Before we tenant it, we just refurb. Please ensure you have evidence that the property was usable. All right? I say it to all my clients, please just go in. I know you've got the agent's particulars, but actually just walk in with a camera or video camera. It's on all of our phones now. Record what's in the property. That's going to be important later on when I'm going to talk about replacement of assets. So if you bought the property with some furniture in it, but generally, I don't care what the state is, just photograph it so we can see what it looked like. Obviously, decent light if you can, please make the pictures, the evidence. Very understandable. Because what HMRC will tell you, that a repair cannot represent, may constitute capital expenditure if you're enhancing the property. Just done all that. Factors relevant. Whether the asset could be used without being repaired. Now, you bought a property. You bought it from Mr. and Mrs. Jones. They moved out. You bought the property. Well, get some evidence of the fact that they were living there. Will you get them to say that it was their home? Because they were physically living there. It was capable of being used. As you walk in, photograph the place. So you can demonstrate that actually the property could be used without being repaired. Now, you just chose to have it tightened up a bit. So therefore, you'll find, certainly the accountants will say, well, if you're not going to refurb it straight away, get someone in there, prove that it was used, because you've housed someone in there. But of course, once you put someone in, can you get them out? Can you get them out in the right timing? I fully agree with you. I refurb straight away as well. So the question HMRC will ask is, well, yeah, okay, you might have used it short term, but it wasn't capable of being used long term without the work being carried out. So again, they're still trying to push you towards capital, aren't they? They're pushing really quite hard on capital. And this is the biggie. Was the price of the asset reduced because of the state of repair? We all go for a BMV. We're all looking for that deal. We all know we can make profit by buying well. But does buying well mean it was underpriced deliberately because of the state of the place? No, it doesn't mean that. It means that you happen to be good at your job and you've managed to find the rationales to help this person by selling, even if they had to sell a little bit below market value. Evidence, please. Let's try to visualize your accountant having to have this fight with HMRC 3 years after you refurbed. The accountant wants some evidence. I want the photographs. I want the bits of paper that show me that the property was habitable. You happen to get a good deal on the buy price because they wanted to move to Australia, not because the house needed repair, whatever the reasons are. Make sure you put the evidence. Again, clients will understand I talk about the cupboard. Have a cupboard, put the bullets in that you might need me to fire later. Give me the evidence. Okay, moving on. There is a feature called...
Sorry, I had my mic on mute.
Okay.
We've spoken about this quite a lot, about understanding that if you can create the evidence for later on, and this is why we do these, is so we know what the later on actually looks like, so we can see into the future, and this is the whole point of doing these things. But we talked about this again and again and again about, making sure you've got the evidence, making sure that you've got it in writing, making sure you've got a photograph of it and all those sort of things. Yeah. So, maybe one of the things that we can do at one point is sort of maybe sort of do a little checklist on some things every so often. Just
that's a very good idea.
Evidence do I need when I buy a property, for instance? Because it's such an important aspect having these evidences throughout. I mean, it's not just in doing things like refurbs, but it's when you're structuring businesses, make sure you've got the paperwork for this and this and this. It can be quite daunting.
Yeah, absolutely. Again, there's a piece of legislation. I'm going to go off on a tangent for a second. And thank you for interrupting, because maybe I could have a quick sip of my tea as well. So
you have a sip of your tea.
Yeah, great. There's a piece of legislation called IR35, which is all about, is a contractor really a contractor, or are they really a pseudo-employee? It doesn't matter what it's about. But anyone who is a contractor, who's one of my clients, will know I say to them, I want to have a file in your filing cabinet, and it's a lever arch file, and I want a file in there, and it says IR35 evidence on the spine. And every time I'll talk to you, I want you to get the file out and show me that you've been putting 3 bits of evidence every month in that folder. I want the information. Don't just give it to me today because I'm moaning about it. Give it to me every day. Learn for it to become a habit. So, what's the expression? Hope for the best and prepare for the worst.
Yeah.
You crack on, go and make some money. But by the way, whilst you're doing it, give me some evidence in my little cupboard. Give me some bullets to fire. Don't let me face a tax inquiry on your behalf. And you go, well, what I did was, I didn't get any paperwork about it. really, how do you want me to fight this one? I can't win if you have no evidence at all.
I mean, also, the point of a lot of this is as well, which we've spoken about before, is that yes, you can go and get that evidence. You can maybe ask for a copy of something or all those sort of things, but the time it takes to do that, to try and find out what you need, who you need to speak to, the process that they go through, it's quite a lot of stuff to do. And so if you can think about doing it as you go along. If you find you've got an invoice, you put it somewhere. If you've got a letter from like a vendor or something, you put it somewhere. So you have that evidence to hand. I think that's the key to a lot of this stuff.
It is. But there are circumstances. I totally 100% agree with you, Andy. No problem. But there are circumstances where actually it's difficult to go backwards and get the evidence. I'll give you a property one unrelated to this topic. Overseas investor. Has property in the UK. They own the property in the UK. They've owned it forever since they lived here. The rules changed on the valuation process, and everyone, overseas investors, would know that the rules changed April 15. You're meant to have valued your property. All it was get an estate agent to look at it and send you a letter saying, "Yeah, I think your property's worth," just because that's rebasing, and that rebases the value of the property for capital gains. Great. Now we're selling property and say, did you get it? Well, I knew I should have done, but I couldn't really be bothered. Thanks. Now what do? How do I get the value of a property? So you're based upon me doing some mathematics based on internet research, but that's not specific and focused on your property.
And might not be, some of that information or that evidence might not be accepted by the people who
absolutely. And I've got to have a fight. Yeah. Anyway, moving on. Okay, integral features. There are special rules on integral features. So let's define integral features. Electrical system, you had to rewire the house. Cold water system, the plumbing was knackered. Space or water heating system, you had the central heating. And I don't think many of us have got lifts and escalators in our investment properties. I don't think you can have external solar shading. Under those rules, if the repair cost is more than 50% of the cost of replacing it, so even though you repaired it, but it was more than 50% of replacing it, they have to treat it as capital. So you've called the electrician, you've called the plumber in to look at the central heating, and he's quoted you the price. Get him to tell you the price of the whole thing if he had to replace it. So, and obviously we're looking for that to be less than 50%, so I can claim the revenue expense. Right. How do you want me to deal with this 5 years or 3 years down the line during a tax inquiry? How do I prove it was less than 50%? Okay, so be careful of integral features, everyone, please. Oh dear. Here's Mark cracking on. Do you like my little picture in the top corner? I like that little picture.
That's what it feels like most of the time.
It's what it feels like in my life. I have an interesting one. We're trying to do paperless, and Daniel, my business partner, he's managing director of the firm now, he's banging on about doing paperless, and it's really good, but it doesn't feel like it to me. I'm going to write records again, everyone. I'm ever so sorry. I am going to write records. And for me to talk about it, it's going to come up in blue italics. I'm sharing with you the guidance from HMRC. Good record keeping is essential. Poorly kept records can contribute to difficulties. Duh, yeah. So get your records right. HMRC are telling you to do this now. So what else are they saying? Also relevant, where we have to try to apportion. Right? So hang on a minute. So why did they start telling us to keep good records? Because if you don't, we're now going to start looking at where we can apportion. So where records do not allow for an apportionment, all the expenditure is treated as capital. So if your records are poor, they win. Think about that, folks. Get your records right, because they've actually set the rules now that if you don't, they win.
Right.
I'll give you an example. Planning permission. You bought a plot and you're going to apply for new planning permission. Well, the new planning permission will create an enduring benefit. It's one of my examples later on. Will create an enduring benefit. So it's a capital cost. Now, at the same time as the planner's doing that, he's also renewing the planning that exists on another part of the plot. Let's imagine this bill doesn't say that. Let's imagine that you didn't bother with the record keeping properly. Well, they don't know how to apportion it now between the new build and the renewal of the planning. Oh, well, fine, just disallow the lot. It's all capital. You lost again, folks. Just simple stuff, but you'll lose. Please try and keep your record straight. And I'm sorry, keep banging on about it, but it is important. Yeah. Yes, Mark does use this sort of language as if something walks, talks, and looks like a duck. So I want to give you an example. I've just done one with the planning. Let me do another one. Example. There you are. You've received the invoice, which says, to the supply and installation of the all-new, super deluxe, top of the range, bathroom suite, latest technology, temperature stabilization. Brilliant. Doesn't that look good? Isn't that super? Certainly the plumber has justified why he's charged you such a high price for this bathroom suite. But please think about the accountant and what I've got to try and do with this for you. Does that invoice help me in any way if I've got an inquiry? Surely if the invoice had said to replace the existing bathroom, you're replacing something. First invoice didn't say that. It said to the supply and installation. Was it new? Was it a new installation? No. To replace the existing bathroom suite with the modern equivalent, complete with a thermostatic mixer tap. Great. There is no way I'm going to lose an argument if you give me an invoice for that with that second narrative. Give me an invoice with the first narrative, I'll probably not lose. I'm pretty good. But you're going to make me fight harder. And if I fight harder, it's going to take more time. And if it takes more of my time, you're going to pay a higher bill. Please help yourself. Try and get your invoices. So think about what the invoices actually say. Now, of course, I've used a daft example, haven't I? But if you've got to try and understand what the rules are, now look at what the bill says. Look at what the quote says. Do you need 2 quotes from your planner? One to renew an application, one for a new application. Think about what you need. Okay. It's a topic that we talk about on various other presentations. I'm going to do capital allowances. I've done this on the FHL presentations that Andy and I did together. Only a short sentence now, folks. It might be something that we have to put a full presentation together on if anyone's interested in it. Where you've got capital expenditure, this is not on the bricks and mortar, for example. It could be on a factory, for example. If you've got bricks and mortar on a factory, it can be. Bricks and mortar on a property, on a residential commercial property. Capital allowances can be claimed for the central heating, the electrics, and blah, blah, blah. You cannot claim capital allowances on a BTL or HMO. I know we used to, but we lost in court. The property industry lost in court on that one. But you can claim it on commercial property. And remember, commercial property includes FHL SA. If you want to go back to the presentations that we provided on the FHL SA, you'll know that I warned you in there that be careful. HMRC have been attacking all of the tax allowances and the tax benefits we've had from FHL SA. And I think there is an inevitability there's going to be more attacks in the future. But for now, we can certainly claim capital allowances. The one I particularly want you to think about are the replacement items. Now, you buy a property. Let's say it's a probate. Okay. There's a lot of tatty old furniture in there. And you say to the family, well, yeah, I'll buy the property. You are going to get all this tat out, aren't you? Don't say it. Leave the tat in, will you, please? How much is it going to cost you to remove it? Not a lot. It's a bit of effort and a skip, okay? Or bonfire. Depends where you actually live in the country. But now you've gone in with your camera and you've photographed everything. So you photographed it with a settee, with a fridge, with all the tat that might exist within this property. Just leave it in there. Just be nice. Why? If you replace an item, then we got replacement items. We can claim relief now. Okay, so you've now got evidence that there was a fridge. Good. the fridge has been thrown away because it's ancient. If you've replaced it with a modern equivalent of that fridge, we can get tax relief on that fridge straight away. Because when you bought the property, there was a fridge in it. Ideally, the legal documents ought to say, to the house and contents, but just photograph it and give me enough evidence, please. Just give me some evidence. Now I can get tax relief on the fridge. Now the sofa, the furniture, I can just get tax relief because you're replacing an existing piece of furniture. Okay, it's a replacement item. Make sure the replacement is same or similar. So there's a tatty old fridge in this place. You've said to leave it, they left it, you photographed it, you've thrown it away. You've now replaced it with a state-of-the-art, modern, American-style, ice dispensing, super-duper fridge. Just imagine the two photographs and me trying to explain to the taxman actually that we've replaced like with like. Probably haven't. So I might not be able to get that one. That might have to go to capital. But if you are replacing like with like, an old fridge with a new fridge, just an under-counter fridge, yes. Make sure we got the photographs, give me the evidence, get the records right. Now I can claim the relief. Okay. Okay, you'll be pleased to hear you're on to the last of this presentation. As always, I'm going to give you a list. This is not exhaustive. Please take advice. We're looking at the distinction between capital and revenue. So, cost incurred in acquiring or disposing of an asset is capital expenditure. I think we're talking about the legal fees here, aren't we? Yeah. Cost incurred on the unsuccessful purchase of property is capital expenditure. So, you've got involved with the solicitors. You might have had a planning application on, I'll buy it on an EDC subject to planning application. You've gone through the planning process. You didn't get the planning. You lost. You walked away from the EDC or the option, whatever you're in. It's capital cost because you're seeking to purchase an asset of enduring benefit. Changes in the ownership or structure of the business. Again, clients of ours, you'll know, we do very detailed quotations, very detailed invoices. So we will specify, are we creating a company? If we are, here's the cost for that. Are we giving advice? Are we doing post-formation work for you, for example? There's a price. So we identified the bit that was capital, and we've identified all the bits that are revenue. Right. So look for your detail, back to record keeping, back to getting the documents right, getting the evidence right. Same thing, bringing in a JV partner. As an investor, bringing him in as a JV partner. I'm not talking about borrowing money off him and creating a loan agreement. No, that's different. Bringing him in as a partner. It's a change in structure. Training costs, the old nutmeg. There is a complete presentation on this. Andy and I did a complete presentation on training costs. If you're learning a new trade, it's capital. If you're in a company and the company sends you to do training, I know we've got the strategy implementation live this weekend. 900. I wish I was there. Then if that's additional incremental, then that's allowable revenue. So if in doubt, Andy, message me, message Andy, we'll give you access to the presentation on that one. I've got it on my video channel. More and more I'm seeing franchising within the property market. You've learned how to do something really, really well. Now you are franchising it off. The guys that are buying the franchise, absolutely just be careful of that thing that's capital in their purchase price. So if you're selling a franchise or buying a franchise, please take advice. You're just setting it up. There's a dear lady in London who I'm just doing this with. You want to make sure that there is an ongoing deliverable within the capital cost, because that makes it revenue. If it's just simply giving the money so that I can sell you a franchise, it's capital in its nature. So how we distinguish that franchising fee, very important. I bet that's the one that surprises you. Website. Designing a website, who'd have thought designing a website could be a capital item? Well, it can be if it has an enduring benefit. So maybe you're one of the property guys that's got some great funnel activity going on, and the funnel creates income for you because it generates this massive activity. You could well be looking at a capital cost there rather than a revenue cost. And as always, the devil is in the detail. So remember, this is not professional advice to you. This is simply me trying to give you an idea of where the topics are that you should go and talk about with your advisor or come and talk to us. And that will complete, I think, enough for today on capital and revenue. And hopefully that's been useful to you.
Brilliant. Thanks, Mark. What we'll do is just quickly stick the contact details up. And again, as we say with this, Mark does some initial free little bits of advice for you if you're in the PIN community. If you use the email here, and the email is probably the best way of actually starting the conversation.
Always.
So just use pin@property-tax-advice.co.uk. And this is just initial introductory advice. If you use Mark, you pay. You know, it's like not taking the mickey. We say this every single time, but you know, we know what people are like. They say, "Oh, I'll just ask them anything." You know, no, it's just basically just to get into it and start thinking about actually using some proper tax advice in the right way, which is really important in this. As you can see, there's a lot of things that go on, and if you look at some of the stuff that we do with Mark, some of the other videos that we've done, which are all in. If you have a look in there, it's all in the guides. So you just click on guides and then top navigation of the Facebook community page, and there's all the videos in there from us, all the videos from everything that we do in there. But go and have a look at some of those as well, because they really, really are interesting. Some of the things that we've been covering over the last, just in the last sort of 3-4 months, whatever we've been doing, it's been incredibly interesting. And will save you a ton of cash if you get it right, which is the whole point. This is the whole point of running a business. It's not just how much money you earn, it's how much money you save at the same time.
Yeah. And it's where the family's going to go to in your wealth creation. So did you enjoy the budget, Andy? Come on, it's budget day. We ought to say something about it. Did you enjoy it?
Yeah, I mean, it's been very interesting. I mean, one of the things that, a lot of the stuff that's come through was some of the startling figures that, just off the top of my head, there was something was saying that the amount of money, the sort of money they borrowed, has been huge. I mean, it's millions and millions and millions of pounds, obviously, but it's the most, it's the worst the economy's been in the last 300 years or something because of COVID.
Well, the total COVID borrowings now. So far, I've made some notes because I'm listening to Rishi. I'm writing, because we've got to get the publication out. Our clients get a briefing tomorrow morning, and then I'm presenting tomorrow. But 355 billion we've borrowed so far. Next year, we're going to borrow another 234 billion. And it's the biggest, it's wartime debt. It's equivalent to, it's a little bit smaller than wartime debt, but it's equivalent to wartime debt. So obviously, there weren't any huge surprises. Now, I think every single one of us expected corporation tax to increase.
25% now, isn't it? Or will be.
It is, but 70% of all businesses make less than 50 grand a year profit. That's fine. They don't face a tax rise.
Yeah.
So the accountants are now going back into that game and going, tapered increases. So it's 25% if you make £250,000 profit. It's 19% of 50 and tapering through. Now, I haven't printed the red book off yet. I've got to do that straight after this presentation to see whereabouts those numbers lie. So now, going back to the topic we've been talking about today, how I can claim some capital allowances for you, or how I can claim some replacement relief or get some repairs rather than capital items can bring the profit down, and I can bring it down into different categories and lower not only the profit, but lower the tax rate by careful management of the tax bill. So we're going to be going back into very, very careful management now of tax rates.
Yeah, there's also stamp duty holiday. Isn't going to end on the 31st of March anymore. I think it's 30th of June.
30th of June, and then the holiday extends. At the moment, obviously, it's the £500,000.
Yeah.
And then come 1st of July, there is still a holiday but the stamp duty free allowance goes up to $250,000 from 125 for another 6
like
months.
tapered extension as well, isn't it?
Tapering. It's all trying. Tax rates will increase on a taper basis. Stamp duty will exit on a taper basis, which makes so much more sense than having these cliff edges all the time.
Yeah.
But obviously, personal tax, we're not going to get the increase in personal allowances. Well, we've had significant increases so far. The planned increases are only going to be small, so we haven't given up a lot there. I think I think there's more to come, because that can't be enough to get back all this debt. But it depends how long they plan to take to get the debt back. So
yeah, I mean, there's some things in here that are quite interesting. They got some new restart grants that are going to come into place. I think it's like 5 billion on new grants, and that's really to help businesses to restart their business after COVID. So
I made a note of that one, because the restarts now, you're talking about grants of £5,000 or £6,000, remember, so £6,000, and there's another restart grant of £18,000, and there's a new loan facility as well, the restart loans. So the bounce back loan and the C-bills caused all the banks to jump in a hole and pull the hole in after themselves. They haven't even opened bank accounts for the last few months. I know that 28th of February, some of the banks started taking on new business again. Lo and behold, we've now got the restart loans. Okay, £25,000 is your starting point loan, up to a £10 million loan. Okay, so I wonder if the banks are going to cope with this one. What if they're going to do a better job of it than they did with bounce back, because they made a complete cos of that.
Yeah. Well, they've got to do something with some of these businesses that have really suffered badly. So let's hope it works. We'll keep an eye on it over the over the following months, and we'll come back. But I think it might be an idea to sort of go back when we digested this a little bit, maybe to come in a couple of weeks' time and just sort of trip through.
We've got as a firm, we're doing a presentation on Friday. Right. For anyone that wants to look at it, that's fine. But you've got to digest the 200, 300 pages of the red book, and you'll see what else comes out when you start to get some of the statements coming out. So the devil, as always, is in the detail.
Love it. Listen, Mark, it's been absolutely fantastic again, mate, and really interesting. And I think that's all these sort of things are really good to just go through and find out as much as you can. As I say, if you want to contact Mark and his team, then email them or give them a call.
Absolutely.
And we'll see you in a few weeks' time, and we'll have some more fun with tax.
Bye, everyone.
See you later.